Trump just announced 10% tariffs on virtually everything that enters the United States and basically every single country. And in a lot of those instances, it's much more than 10%, up to 50%. So what I'm going to do in this video is cover everything that you need to know, as well as go over the massive consequences, both positive, maybe, and mostly negative. I'll also give you my thoughts on the matter, and I'll cover a couple of misconceptions. So without further ado, as always, my name is Derek, and I got my degree in finance, so you don't have to. Let's dive right in. Now, I'm filming this the day after these tariffs were announced. Now, Trump did announce these tariffs after market close, which means today is the first day that the stock market was able to react to them. And it is not reacting positively. The Dow Jones is down well over 1,000 points. The S&P 500 is closing in on 5% drops, and companies like Apple and Tesla are all down. Now, of course, this is to be expected because tariffs basically increase the cost of doing business for many of these companies, which means that profits will likely go down, and of course, the market is going to react accordingly. The market also doesn't like uncertainty, and of course, these tariffs bring a lot of uncertainty. So what are these tariffs in the first place? Well, Trump announced them on what he coined Liberation Day. Basically a day which is supposed to equalize the United States when it comes to trade with the rest of the world. Now, he did so by announcing what he is calling reciprocal tariffs. But there's some things that we need to talk about when it comes to that. Basically, he announced a bare minimum 10% tariffs across the board for everything that enters the United States. Yeah, you heard that right. This is basically blanket tariffs. Now, before we talk about the very likely consequences, let's cover a couple of things. And the first is how these tariffs were calculated. Instead of doing what I would consider true reciprocal tariffs, which is basically tariffing individual goods that are tariffed from other countries, basically, for example, I don't know, shoes. If some company tariffs our shoes that we import into that country or export into that country 10%, then we would place a 10% tariff on their shoes. That's not what this is. This is basically the same tariff amount for the entirety of each individual country. And some countries are well into the 30 and 40%. Not only that, but this seems to be based more in trade deficits, not necessarily what other countries are tariffing us. So regardless of what the other tariff is that those countries are placing on us, it seems that Trump instead did some sort of rudimentary tariff that is based on the trade deficit. So there might be instances where we actually already have a higher tariff on, say, country A, but it won't matter because we still have a deficit with them. So I'm not really so sure that's even reciprocal tariffs. I mean, I guess technically it is, but to me, a cleaner way of doing this, and probably a way that you could have gotten more people on board and maybe potentially saved the market from crashing, would simply be to say that if that country has a tariff on us, whatever percent that is, on that good, then we would tariff them. That to me seems more like trying to promote free trade. What this seems is more so trying to curb the deficit, the trade deficit, but a lot of countries are significantly smaller than the United States, and by the very definition are going to have trade deficits with the United States because they're obviously going to export way more to our country, which has 300 plus million people, than we are going to export into their country with 10, 20, or 30 million people. So the way that he did it seems rudimentary at best, and it doesn't really seem like true reciprocal tariffs. Now, right before we talk about the major consequences, because there are going to be major consequences, the one misconception I want to clarify is that people are saying that Trump chose not to place additional tariffs with Russia. Now, this seems to be true. Now, his justification for this is that there are already massive tariffs on Russia, and that is also true. So while I'm not necessarily defending the behavior, I do kind of see it. I mean, the tariffs on Russia and a couple of other countries that were left out are astronomical. So adding a 10% tariff on top of that seems unnecessary, although it does kind of seem like he's playing favoritism if you don't actually dig into the reason why. Okay, and now the main thing. The consequences. Now, I did say both positive and negative. I mean, the positive might be that some of these trading partners actually reduce their tariffs or potentially eliminate them, which I guess is Trump's main goal, and it might work with some of our smaller trading partners. But it can also do the exact opposite, which is cause retaliatory tariffs, especially from countries or groups of countries like the European Union who have significant power in the global trading market. And instead of backing down, they might just add retaliatory tariffs. Or some countries, like for example, Australia, the European Union, places that have power to trade might instead just start aligning themselves more with China or India, which of course, when it comes to China, is not good for the United States if we're going to consider China a world adversary. Now, when it comes specifically to China, I can at least see the justification. China is, for all intents and purposes, a world adversary and our competition. So if we're going to increase tariffs on China to kind of slowly move away from the fix that inexpensive Chinese goods are to the US consumer, fine. But a lot of the other tariffs are placed on our friendly allies, like was already done with Mexico and Canada. But now throw in the European Union, all sorts of countries there, Australia. I mean, these are our allies. So if you want to fix the trade deficit with them, first figure out if the trade deficit is even a problem or if the other countries are just significantly smaller. And if it is a problem, then open up dialogue and negotiation with these countries to try to reduce the tariffs. And yes, you can even use them as a negotiation tactic. You can say, hey, you have tariffs on this good, and this good. If you don't remove those tariffs for American goods coming into your country, then we're going to add the exact same amount tariff to your goods, those specific same goods coming into the United States. That to me seems like a much more smooth and friendly way to handle trade negotiations with our allies and our friendly neighbors. Because look, I'm all for free trade. I think American companies should have an equal footing as everybody else to compete on the global stage. I'm just not so sure if this is a way to do that. Okay, now let's talk about the consequences for the US consumer, because this is where we are going to feel it the most. The average American right now is having a tough time economically, and a huge portion of Americans are struggling financially. And of course, the question is why? Well, because prices are much too expensive for the average wage. And these tariffs are just going to make that ratio or dynamic worse. Because if anything, these tariffs are going to bring back some jobs to America. Fantastic. The thing is, we have a relatively strong job market, at least on paper. So unemployment really isn't the problem. What the problem is that people need to get paid more for their labor so they can actually afford the prices of goods. So by instilling tariffs on everything, and we import roughly $4 trillion worth of goods, why? Because they're less expensive. So by adding tariffs to all of that, that is going to make daily life for the average American significantly more expensive. And it is going to increase the price of everything, including essential goods. This will directly affect American consumers. And this is basically a tax on the consumer with extra steps. Trump can call it whatever he wants, but in reality, at the end of the day, the American public is going to be who pays the tariff. Yes, it's charged to the importing companies, but those importing companies are not just going to absorb the cost, especially on essential goods, a lot of them which already have very small profit margins. So even if the companies wanted to absorb the cost, they can't. Those essential goods are then going to get more expensive. Hence, the American consumer is going to pay it. Hence, this is basically just another tax with extra steps. And when it comes to Trump, who ran and won on the basis of lower taxes, this seems out of place. Now, of course, he's most likely going to attempt further down the line to cut income taxes. But what this is basically doing is it's replacing a progressive tax, basically a tax that is adjusted based on how much income someone makes, with a regressive tax. Regressive tax is basically a tax that disproportionately affects lower income earners. Why? Well, because everyone has to purchase essential goods. But if one person makes $30,000 a year and has to spend $30,000 just to survive, that's 100% of their income that's going to be taxed, not directly, but through tariffs, as compared to someone who makes $1 million a year and lives off of $100,000. That person only spends 10% of their income, which means that only 10% of their income is going to be taxed. So what does this end up as? Well, it ends up as basically a consumption tax, which is something the right has pushed for many times in the past. And that attempt is usually done with H.R. 25, which is basically a consumption tax bill that is introduced into Congress like every year. So these tariffs do kind of seem like, in a sense, Trump just unilaterally implementing somewhat of a consumption tax. So yes, the major consequence is going to be more expensive goods for all Americans. And I've heard the counter argument, well, just buy American-made goods. The problem with that is, why do we export labor overseas to begin with? Because American labor is more expensive. That's why American goods are more expensive, which means that just to buy American goods for all those families who are living paycheck to paycheck means that it's still going to be more expensive. Not to mention that you have a double effect when it comes to this, because you are basically stifling foreign competition, which will allow American-made goods and companies that make American-made products to raise their prices. Because that's how economics works. Companies want to maximize profits. So if you have less foreign competition, not only are your goods more expensive because they're made in America, but now you can raise your prices anyway because there's less competition for consumers to choose. So the argument to just buy American-made goods, which I'm all for, you should support your local and small businesses whenever possible. That's the key word though, whenever possible. For a lot of American families, it's just not possible because of how expensive things have gotten. And in those instances, they should have the choice to purchase the lesser expensive good so they can survive. Now, with that said, inflation is not the only likely consequence. It's the most likely consequence. In fact, it's basically guaranteed. But the next consequence is a potential recession, because this very well may slow down the economy. And when you look at analyst predictions and major investment banks, they are all revising and increasing the likelihood of a recession in 2025. And one of the main reasons that they are doing that, when you read into the reports, is because of Trump's tariff policies. And of course, that leads me to the next possible consequence, the worst one of all, and that is inflation caused by the tariffs, as well as economic stagnation caused by the tariffs, which gives us a possibility of stagflation. Now, stagflation is an economy and an economist's worst nightmare. It basically combines two of the worst economic possibilities, higher prices, with economic stagnation, that means job losses, to create a nightmare scenario where people are losing their jobs, yet things are getting more expensive. If that happens, that would absolutely decimate the average American family. Now, luckily, this is the least likely of the consequences, but this for sure increased the odds. Now, to wrap up this video, I'm going to leave it here. We'll have to see if these tariffs actually stick, because if we've seen anything from Trump's previous implementation of tariffs, they only stick around for a little bit, and they are used as sort of a negotiation tactic. And if that is the case, well, then maybe the majority of these consequences won't actually happen. Here's the problem with that, though. If they are implemented, even just for a few months, companies are going to increase their prices to counter the added costs. And we are well aware, especially when we see over the last few years, we are well aware that once companies increase prices, they are very unlikely to reduce those prices once tariffs or any other cost has been eliminated. So if these tariffs are implemented even for a short amount of time, we run the risk of these companies just leaving the prices higher because consumers have gotten used to them and now pocketing even more profit. So we'll have to see over the next few days and potentially next few weeks what Trump decides to do. Is he actually going to follow through with these on April 5th and the added tariffs above 10% on April 9th? If he does, we'll then have to see how long they last. Are they going to last a few days, a few weeks, a few months, or are they going to be permanent during his presidency? Only time will tell. I hope you found this video informative. If you did, please consider subscribing. It helps out the channel tremendously. And if you like personal finance, world economics, and investing broken down simply, you are in the right place. So I hope you stick around for the next video. Until then, I hope you have a fantastic rest of your day, and I will see you in the next one.